What's up, you guys? All right, well, today's a red day recap. So second red day in a row, moving in the wrong direction here. I had a red day yesterday, 28,000, another $11,000 loss today. So when it rains, it pours, and this is, it's so typical. It's so typical of me. It's just whenever I start to have this sort of sell-off pullback in my P&L, a couple red trades, it just so often cascades into a multi-day red streak. And you'd think after all these years of trading that I would get better at easing off the throttle, and I don't. I haven't. I don't know. We'll talk about it during the recap. I guess what I can say that's good is that when this happens, even over the last 3 or 4 years of trading, it kind of always happens to the same extent. I go down usually between $25,000 and $50,000 over the course of, a handful of red days. Sometimes it's 3 red days, sometimes it's 6 red days, sometimes it's 5 red days over the course of 2 weeks, but it's just generally going lower. But 48,000 is the most I've drawn down before starting to dig myself back out, and that was a year ago. So right now I'm down 38,000 in 2 days. It sucks, obviously, and there's a high likelihood that if I come in tomorrow and do what I did today, I'll be down another 10,000 tomorrow, right? I mean, this is sort of the area where I get frustrated myself because today could have been prevented. It could have been minimized much more so. I was aware of the possibility of this happening yesterday, and then it still happened. So that's what the recap's going to be about, dealing with red days and being honest with yourself when they happen and trying to figure out the best way to push through them so you can get to the other side and start to, rally and sort of rebuild off the lows, and finding where's that point where you've hit bottom and you're going to start coming up off the low. And unfortunately, I don't know that I've hit bottom today. So it makes me nervous going into tomorrow because I just don't know what the market's going to have in store for us. But yesterday was not great. Today was not much better. The only thing better about today was that I stopped trading sooner, because if I kept trading, I'd probably be just as red as I was yesterday. So if tomorrow is again like today, where we're not seeing a lot of volatility, which is to say that we're seeing a lot of stocks trading in very tight ranges. They move up a little bit, you get in, then they come back down. They go down a little bit, you go short, then they come back up. It's just range bound. So it doesn't matter whether you're long or short. We're in a range bound market where there's not a lot of volatility, and that makes it hard to make money, no matter how you trade. And so the only thing you can do really is just try to tread water, keep your head above water, not lose too much ground. You're not going to make a lot of money during this market typically, but hopefully you can avoid losing money during this market. And in that way, it's kind of sideways until things start to open up for the next move higher. But unfortunately, what I've done for myself by being stubborn, really, is I've dug myself a hole yesterday and now continuation today. And it's going to take some good trading to get myself out of it. It's not going to happen overnight. It's not going to happen in one trade. It's not going to happen in one day. I'm going to really need to have the markets, the wind back, at my back, and markets are going to have to be in my favor. And that's just going to be now a patience game, waiting for things to turn around. So that's where we're at right now. We'll see how things look tomorrow, but I hope you guys enjoy the recap. These red day recaps, I think, are generally appreciated by you guys. So I appreciate you. Please hitting the thumbs up if you find any value in these recaps. Otherwise, I'm just not going to do it because these aren't fun for me. I'm not doing this for me. This recap, this isn't for me. It's not helpful. I don't enjoy going and talking about how much I lost and then putting it out on YouTube for 500,000 people to watch it. I'm doing this because I hope that it benefits you. So please, if it does, hit that thumbs up button, and I'll see you guys maybe tomorrow. I don't know. I haven't decided what I'm going to do tomorrow. I might just step back and take a day off. I just don't know if I'm going to be centered tomorrow after this. Anytime you have a couple red days, you got to just sometimes you just have to step back, because it's like, listen, I wish I could trust you to follow your rules tomorrow, but I don't know if I can. So anyways, I'll let you guys enjoy the recap, and I'll maybe see you tomorrow, or maybe I'll see you later in the week, or I'll see you when I see you. What's up, you guys? All right, so second red day recap here. Finishing the day down $11,500. This is kind of exactly what I didn't want to have happen today. A second red day recap, and not a small one. So in this moment right now, I'm just 5 minutes from closing my last trade. And I feel really disappointed. I feel really frustrated. I feel all the same things that every single one of you would probably feel after a good sized red day, or after your second red day in a row. I'm disappointed in myself that I wasn't able to keep tighter stops today, which was sort of like the main goal of the day. I'm frustrated that I was okay on the first couple of trades on NVUS and IPOB, and I was up around $1,500. And then on my first loss on EQ, it was gone. And just like that, the emotions kicked back up, because when I was making some small progress on NVUS and IPOB, I was like, all right, well, hey, I'm doing what the goal was. I'm having a couple small trades, a little bit of profit, nothing huge, but at least I'm moving in the right direction. So NVUS, I bought for the break at the pre-market high right here, and we got a nice trade up through this level, $1,300. IPOB, I took 3 trades on. 2 trades pre-market in kind of like this area here, and both of those were like break-even trades. When the bell was ringing, I was down $110. The market opens, and I took one more trade for the break over 16, like right in here at 1590 or something like that, and got out for a small profit. There was a big seller at 16. It couldn't break that level, and it flushed back down. So I'm up 275 on that one. And, at that point, I was like, okay, I was feeling okay. I was a little bit discouraged that stuff wasn't moving very much and we weren't having a lot of momentum, but I was like, I'm okay. EQ, I jumped into this one for the break of 7 right here, and it hit 701 and then dropped to 670. Big stop out. And it squeezed back up right here up to 750. So it did continue, but then it came right back down. And, I just feel like I sized too aggressively on it and got caught in that flush. And it was stupid for me to be sized up that aggressively. I guess I thought on this one, I was like, oh, it's breaking the VWAP. It's the first pullback. It's going to break over 7, and I was adding right at 7 for the breakthrough that level, hit 701, and then flush. And I was like, this one's got news this morning. It's got the pre-market high of 765. It's just starting to open up on the 5-minute chart, ascending volume. Everything looks good. And it ended up going higher. But then it came all the way back down. So that is where things went off the rails. And then MRNS, I jumped into right after I stopped out. And that was one of those kind of impulsive jump trades where I jumped in right here at 395. I was like, actually it was right up here. I was like, it's going to break over 4. Jumped in like right here, and it hit 97 and then pulled back. And this one, on the 5-minute it was extended. I knew it was a high float. I didn't like it pre-market. It was a stupid trade, a totally unnecessary loss. I shouldn't have even taken that trade. The problem is, and a lot of us fall into this habit where it's a risk aversion thing, because initially we'll be adverse to risk. We don't want to take risk. You don't want to go red. But then once you're red, It's like, well, I'm already red. What's the difference between red 1,000 and red 10,000? Either way, I'm going to feel bad about myself. Either way, I'm red. So once you start to go red, it's very easy to quickly jump from trade to trade to trade to trade, because each one has the potential to get you to green. And that's the best case. And the worst case is that you're just more red. Well, you're already red, so what's the difference? And that's kind of that where you kind of screw yourself in the way you're thinking about it, because obviously it's much better to be down 1,000 than to be down 11,000. Although both are red and equally red. I mean, red is red in the sense that if you're not green on the day, you're red. But one is worse than the other. And I think that my mind isn't always good at actually differentiating that in the moment. So in that moment, I was like, oh, dang it. I just went from up $1,600 on the day to red. I'm going to jump in MRNS. I'm going to try to get that quick breakthrough 405, 410, and boom, just like that, I'll be back to green. So the upside potential is that my day is saved. And the downside is, well, I'm already red, and I'm just going to be a little more red. But, in this case, that put me down $8,000 on the day or something like that. And then EQ at this point, INO, at this point, I was grasping for straws. And at this point, I saw it hitting one of my scans, and I was like, whoa, look at this thing. It's ripping up. So I looked at this micro pullback right here, and I was like, you know what? I'm going to jump in this for the bounce off 14. Got in right here, like 14.10. Sold as it sold off down here. I didn't sell it until down here, because now instead of doing breakout or bailout, now I'm starting to get more emotional and more frustrated, and third loss in a row. And no, I don't want to stop out. Within 2 minutes, then now I've gone from down 8 to down 11. And so literally today, over a period of about, 30 minutes of trading, I went from up 1,600 to down 11,500 bucks. And so as I sat here right after that loss on INO, I was like, all right, well, what's Tesla doing? What's Netflix doing? And I said, I had the presence of mind to say, you know what, man, the fact that you're pulling up these charts means you're looking for some kind of Hail Mary home run, and your likelihood, while you might catch a winner, you're impaired. Your judgment is impaired right now because you've had a couple losses and you're frustrated. And let's just look at the P&L. You're green on 2 stocks, you're red on 3, your winners are tiny, your losses are big. Is today the day to keep going? Is today the day to hope that we get some big breaking news and all of a sudden I get a big home run, Hail Mary, bail me out of this lost trade? It's not going to happen. The odds of it happening are slim to none. What's more likely to happen is I have another big red trade here, and maybe it's bigger than any of these 3. Maybe this is the trade where I go from down 11 to down 25. And then I'm really pissed. This is bad enough. So I guess the way I feel right now is that if I were giving, my 2 cents to someone who is showing this to me, who is like, Ross, I lost 28,000 yesterday. Today I came in, I lost 11,000. I would say, well, what were your rules for today? Small share size. Did you follow it? No. Okay. So, well, what other rules did you have? And that was really the only rule I had, was small share size, and I didn't follow it. I took bigger share size on MRNS and EQ and INO, actually. All 3 of them I took bigger share size on. And I took bigger share size on NVUS, and I only made $1,300. IPOB is the only one I took smaller share size on, but I still didn't do well. So that's where we have a problem. So the problem is, I think this happens to a lot of traders who've been doing this for a long time, is the feeling of, I'll set a rule, but I've been doing this for long enough that I know what's best. And so there's the part of me that is going to say right now, okay, Ross, this is what you should do for tomorrow. And then when tomorrow comes, I'm like, well, I know what I'm doing. I've been doing this for a long time. I've made a lot of my trading. I know what's best. And you know what? Taking bigger share size on NVUS, it's a cheaper stock. It's the right thing to do. And then once I had a little bit of a cushion, $1,600, slightly bigger share size on EQ, but then big drop. So I feel like if I were going to tell myself what I should do tomorrow, I would say, sorry, man, you should take a couple days off. I wish I could trust you to come in tomorrow and follow your rules. You're going to tell me, no, tomorrow I'm going to trade with small share size. Tomorrow I'm only going to trade with 5,000 shares, 10,000 shares. Yeah, well, that's what you said you were going to do today, and you didn't. So what makes me think that you're actually going to do it tomorrow? Probably won't, right? I'll probably come in tomorrow. I'll say, yeah, I'm going to start with small share size. And then I'll see something that looks good. And I'll say, oh, well, I'm going to increase my share size. I want to capitalize on the opportunity. And next thing I know, I'm trading with 15, 20,000 shares. Now, after 2 red days in the market for me, and I think generally because I trade small cap stocks and I'm kind of trading whatever's moving, I would say that these are probably 2 slower days in the small cap market. Maybe it's possible that tomorrow will be a better day. And even though I won't follow the rules and trade with small size, I'll have a green day because tomorrow the market will be better and we'll be starting to curl off these, the lows of these last couple days. Or maybe not. Maybe tomorrow will be a 3rd consecutive red day. And so, we can go back to my trader view stats and look at the month of February into March. So let me just pull this up here. I would say this is the area where, as a trader, I get super frustrated with myself. So this was right here. So February going into March. 1, 2, 3, 4, 5, 6 red days in a row. So let's go from, let's see, the 27th. What was that? 27th. So 2/27. That's the longest consecutive red day streak I've ever had. It was unprecedented. So I'm only 2 days in right now. For all I know, I could have another 4 red days ahead of me if I don't shape up. All right, so that's 6 red days in a row. $42,000 cumulative loss, gross loss. Accuracy during that period, only 50%. I mean, average winners were 1,000, average losers were $2,000. I wasn't catching. I mean, yeah, there was a winner here, 10,000, a loser here of 11, but I just wasn't catching any momentum. It was brutal. And is there a possibility that I could have eased off the throttle, perhaps a little sooner? So let's look at, coming out of that. So coming out of that streak, I had a period here of, this was a tiny, this basically is what today could have been if I had stopped trading up 1,600. So 1, 2, 3 small days. And then here today I made 21,000. Did I follow the rules on that day with small size? I don't know. I mean, this was back in March, but my guess is that after these losses here, I said, all right, you've got to shape up and scale down to small share size for the rest, for the next 2 weeks. You're red on the month. You got to kind of get focused. And I don't remember, what my share size was, but $21,000 seems like a pretty big trade. And then 11,000 here, a red day, a couple green days, red day. So I was kind of back in good shape by the end of the month, and then 2 back-to-back good size red days, 18,000 in the red, just like that, 2 days, 1 trade and then 14 trades. And then April, of course, was better. So, where I sit here in September, I won't be able to import my trades from today until tomorrow. But let's see. So where am I at? Calendar. Oh, I have a day that I guess I haven't imported yet. I've got to go import that. So anyways, that's where I sit right now in the month. Small green, small green, small green, big red, big green, nice green, big red, big red. Break even on the month. Actually, let's see, up 1,300 on the month before today. I'm down 10,000 on the month. Well, I don't know I can't remember what I made on this day. I'll have to import that. I'll have to go back and look. But so, what I've been doing for the last 2 weeks isn't working, right? And again, it's not to say that my strategy doesn't work, because it works really well. It's just that you're going to have periods where you do have this kind of 2 steps forward, 2 steps back. I've never heard of a strategy in all my years of trading that makes money every single day of the year, or that makes money every single week of the year, or every single month of the year, even. I just haven't heard of it. I'm sure that there are some traders out there that are probably consistently green every month out of the year, but I would wager that their profits would be significantly smaller, than mine, because their risk profile is different. You take less risk and you can sometimes make more money consistently, but when you start taking more risk, you can make a lot more, but then you'll have red months too. And this year I have a red month back in let's see. So what I can't remember what month it was. Overview. January and March were my two. I can't remember if I was red in January or just break even, but January and March weren't great. They weren't great months. I was negligibly profitable, like break even or slightly profitable, or maybe slightly red. So September is kind of looking similar in that I'm now red on the month, I think, and it's halfway through the month. On the other hand, I'm slightly red on the month, and I still have 2 weeks ahead of me. I still have a chance to redeem myself. The month's not over yet. And since what I've been doing hasn't really been working, there's kind of 2 options. One option is just to say, I'm going to step back for a couple days. I'm going to take a couple days to clear the slate. I knew today I was going to be coming in with the baggage from yesterday's loss. I knew there would be some emotional stuff on my shoulders, and I thought I would have the willpower to follow the rules, but I didn't. And so this is, totally self-incurred loss. I would say that, again, the biggest challenge of day trading is having the discipline to consistently follow your rules. Because days like today, where you break your rules, if I was talking to a student, I'd be like, well, what do you want me to say? You broke your rules. You broke your rule on share size. You broke your rule on max loss. This is what happens when you break your rules, right? I mean, it's very simple. You've got a strategy. You've got rules of the strategy that help keep you profitable and help you minimize risk. But if you don't follow those rules, what do you expect is going to happen? As I said yesterday, one of the biggest challenges in the market is that sometimes the market will reward you for breaking your rules, in that you take huge size when you shouldn't. You take that 4th trade after 3 red trades and you're green. Or even you have a huge winner. Or Tesla. Let's say I bought it and walked away because I was so upset and frustrated. Come back now, I'm up $6 a share. The market would have rewarded me for that behavior, which long term, I don't think you're going to be rewarded for. But it's very hard, to go through every single trade and say, how many of these trades in February were, and even maybe on some of these big green days, how many of these big green days were the result of taking a, unsustainable level of risk and it just worked out? So you'd have to actually be very honest with yourself on every trade you take to categorize it as, this was a high-risk trade where I was breaking the rules, right? And actually categorize all the winners that are like that and all the losers that are like that, and then be able to say, so what is the net result of breaking my rules? What would really be kind of discouraging is if I discovered the net result of breaking my rules is that I make money. Because then it would be like, well, what are the rules doing? I mean, if I'm actually net profitable from breaking rules, because sometimes I have a $25,000, $30,000, $40,000, $50,000 green trade, then those rules, I don't know, maybe they're not helping me. But I honestly think that that's probably not the case. I think what's probably the case would be that the net result of breaking the rules of trading past my max loss, trading after having 3 consecutive losers, or taking share size far larger than what I sort of allocate for myself at the beginning of the day, I really think the outcome is net negative from doing that because of days like this right here. So today, the place I should have, So today, the place I should have stopped would have been after this trade on EQ. Well, that actually wasn't 3 losers. But so again, that's a tricky spot. So I guess technically the place would have been MRNS, but both of those trades were on share size that was bigger than what I should have taken. So those losses both should have been smaller. The losses yesterday, 28,000. I mean, obviously, those ones I should have stopped sooner, and I kept trading, and I increased share size to try to kind of make back my initial losses, which was not smart. And so that's what happens. So this was on, and that's interesting. It shows that blip down there. I don't know what that is from, because I wasn't down 40 unrealized or in realized profit loss, but in any case, oh, you know what? I think it, well, in any case, it doesn't really matter. But so, yeah, so 28,000. So first trade 700, next one 700, next one 11,000, 800, then 17,000. You know, these are the big ones that really got me pretty good. Again, I'm just, this recap, I don't know how helpful this is for you guys. I'm just talking out loud, really. I just, as soon as I finished that last trade, I was like, let's just start recording the recap. If that stops you from continuing to trade, then that by itself is a win. But I do know that red day recaps are valuable for a lot of you guys. Number one, most traders don't do them. Most traders only show you their green days, which creates the artificial appearance that day trading is extremely easy and that all you have are big winners and, you know, it's just like everything's easy. But that's not how it is. Day trading is hard. And even traders who have been doing this for a really long time will go through periods, sometimes of weeks or even months, where you're spinning your wheels and you're like, man, I am the same trader who made X amount on that day back there or that month or that year. What's different now? And the market changes, and you have to be able to adapt to changing markets. But the general strategy of trading momentum, trading things that are moving to the long side, or, you know, reversal trading where you buy really, really weak stocks or you short really, really strong stocks, those are valid strategies over the long-term, you know, outlook. It's just to be expected there's going to be periods where momentum is really, really strong and you're able to do incredibly well. And then there's going to be periods where momentum just kind of fizzles and it's slower. And so actually the trading that we're seeing right now, in my opinion, is a lot more typical of what we would usually see in sort of like end of July and August. This almost feels like summer trading. But it's not summer, it's September. And, you know, we're past Labor Day. This is our first full week of September, but we are just not seeing the momentum that I expected. And that's a little challenging because I had an expectation for what this month would give. It's coming up short, and I'm frustrated both at the market. I mean, it's kind of silly to be frustrated at the market. It's like being frustrated at the ocean, but it's frustrating. It's like, come on, ocean, where's the fish? Where's the dang fish? And, you know, they're gone. I don't know. No one knows. Who knows? But they'll be back. We just don't know when. And so you can be frustrated, but that energy spent being frustrated and upset, it just doesn't, it's not going to serve you super well. Getting yourself to that heightened emotional state where you're really frustrated, you're really angry. And so that's why I stopped here at 11 in the red, because I said to myself, you know, you take a trade on Tesla, you do something like, you're upset right now. Think about how upset you're going to be if you double this loss and you're down 20,000. You're going to be livid. I'm going to be ready to take each one of these monitors and throw them out the window. It's not impossible to get to that level of frustration and anger. You know, I mean, it's very frustrating. You see how frustrated people are on Survivor when they lose an immunity challenge. It's like that. It's like the stakes are high, and it's incredibly frustrating. So, one of the things that I talked about last year when I had a rough period, I was like, you know, the emotional swings of trading are kind of taking a toll on me, where I'm feeling, I'm having just these periods where when I'm red and I'm not trading well, I feel just incredibly upset with myself. I'm really angry. I'm just, it's just like, I just feel so frustrated when trading is not going well. And when trading is going well, I'm feeling good, but I also have this like impending doom of like the next cold streak. And even having gone through these cycles like so many times, and last year was not a great year for me, all things considered, because I made less than I made the year before. And that was I was very aware of that, and it was upsetting me. And I was like, why is this happening? Why is the market, why is it so difficult right now? Why are we not seeing more opportunities? Why is it such a tug of war? It's like for every stock that goes up, I mean, it's like even this INO, as I'm sitting here watching it, it's trading within like a 5-10 cent range. These last 15 seconds, just kind of looking at the level too. This just tug of war. I mean, I don't know. We're just not seeing those clear moves that we were accustomed to. And that's how I was feeling last year. And that's kind of been the case these last couple of weeks. But generally, 2020 has been a phenomenal year. But I still have this feeling now of this frustration that, it's like you always have to keep catching fish. You always have to keep catching winning trades. And no trader out there is going to be able to really sustain themselves for a long period of time with no new trades. So when you start to get into a little bit of a rut, it's like, man, all right, I can deal with this for a little while, but at a certain point it starts to become emotionally taxing. And I think that that's something that we all experience. And it's probably, in as part of the classes, one of the things I'm a big advocate of is taking your early profits and instead of buying a Lamborghini, putting some of those profits into some longer term investments, some dividend stocks and things like that. So you can get to a point, 5 years into your career, or whatever it is, 8 years, 10 years into your career, where you can actually start to be earning some income on your early profits as they're, you're getting compound growth, you're getting dividends and things like that. And then you become somewhat less reliant on the day-to-day P&L from your day trading. I mean, that's the smart way to do it. That's the smartest thing you can do. And I think that's probably what most successful traders would do. But of course, you see people that, have a green year and off they go to buy, to start leasing a Ferrari, and they're essentially living like paycheck to paycheck off their day trading profits, which definitely puts you in a vulnerable position that as soon as you have a bump in the road and your strategy, for whatever reason, isn't producing the profits it was producing in a previous month or a previous quarter or year or whatever, that you're back to feeling that incredible pressure of, oh no, I'm not going to be able to pay my bills. Only $10,000 a month isn't going to cover paying my bills. And now I need to make $50,000 a month or whatever it is. So making good decisions early on is important. And we talk about that and really emphasize that in the classes. And while I've done all of that, I still have this kind of like, this account is in a bubble and its performance is measured against itself. And so any month that it doesn't perform well is upsetting to me. And I think as like, like an athlete or something like that, there's just that feeling of you're kind of always being measured against your last week or your last game, your last season, whatever the case is. So I think my experience there is a little different from you guys. And some of you might feel like, well, Ross, what are you complaining about? You've made $3 million this year. You've got nothing to complain about. All right, fair enough. But on the other hand, I'm in a sort of performance-based career where I'm only as good as my last trade. I'm only as good as my last week. I'm only as good as my last month. And being a teacher, it's important for me to set a good example. And so then there's frustration in myself, when I'm not following the rules of the strategy that I teach. And where I'm, clearly making, not as good of decisions as I wish I was making because I fall victim to the same emotional, influences that everyone else does. It's just part of the deal. I think for some of those who have been doing this for a long time, like John and Selena and Roberto and Mike, who maybe have similar pressures, but maybe to a lesser extent, because although they are all providing some education to our students, it's not quite in the same way that I am. And so I don't know. I think it just speaks to the fact that no matter how good you are or how long you've been doing it, you could still find yourself with pressure, and it's how you deal with that. And so as I think about tomorrow, the fact is today the market for momentum has not been great. And it doesn't really matter whether you're long or short. You can say, oh, Ross, you should have shorted everything you traded long. And I mean, I guess you if you just flipped all of these numbers, then I would be green. But the fact is, these places where I got long were not short entries. I mean, that you could always say, oh, boy, if I shorted this top, and bought down here, I would have been good. But just like the long trade confirmation entry was here and then the stop was here to the short side, the entry confirmation would have been down here. And then, your exit, I mean, you're always capturing less. So I actually would wager that someone who is trading the short side on every single one of these stocks could even be read the same as I am. On EQ, if you shorted right here and then didn't cover, or we're only up a teeny bit, and then all of a sudden it rips through the high, you're red. I mean, again, it did a big drop, so if you shorted up at the top, you probably would have done okay. But it's not as easy as, oh, just do the exact opposite and you'll be green. It doesn't really work that way. When you've got less volatility, there's just less opportunity across the board. And so, I have been hesitating on taking new swing trades because I'm feeling a little off-centered just on my day trades. But I also think that maybe is okay, just given the position of the overall market. And I think if I did take some swing trades and then lost over there as well, I would just feel doubly frustrated. So I think it's better, even though there are some opportunities I'm missing, just to kind of cool off a little bit. And so I think the question is, what am I going to do tomorrow? And, will I just leave it to, the junior moderators and the members of the 100K club to kind of take the wheel for a couple days and let them trade, and maybe I step back and just take a couple days off? I don't know, maybe. I just don't know if I can come back in tomorrow and really trust myself to not have another red day. And I think it's unlikely that we have, out of nowhere tomorrow, a really crazy momentum stock that goes up 400%. But that's how it kind of always is, that it is out of nowhere and it catches people off guard. So there's that fear of missing out that, tomorrow's the day I take a day off, and then I come back and I see something went up 400 or 500%, and it's like, God dang it. But in order to really make serious profit on that, I would have most definitely had to, probably break rules on share size and things like that. So I don't know. I'm not sure what I'm going to do tomorrow yet. But as I look at my drawdown, the cumulative drawdown, we were looking at this yesterday. So let's see. All right. So yesterday I dropped myself down to 27. So after today, I'm going to be down 38. And my biggest drawdown is 42. That's the biggest drawdown I've ever had from my all-time highs, 42,000, and I'm $4,000 away from it tomorrow. So I'm coming right up to that mark. I'd rather double bottom and go back up. I don't want to draw down $50,000. Actually, I feel like I might have drawn down more last year. Let me go back. But it doesn't, I still don't want to go further down than that. So that was 48. But still, again, I'd rather bounce just off of 38 right here and have a small green day tomorrow or Thursday and Friday, whatever the case is, and just try to, get centered after a few not great days of trading. So we'll see what happens. I don't know. Again, I'm not going to set anything in stone for what I'm going to do tomorrow. I'll have to think about it a little bit. But where I sit there on the day is down 11,500. And the best thing for me to do is to shut it down and walk away. So I'm going to shut it all down here. And tomorrow's a new day. And, as I sat down today, I did feel kind of like, all right, it's a new day. I was feeling good as I was starting to build a little bit of a cushion. And then the second I started to feel like I was going red right away, I just kind of fell right back off the wagon. So the second I started to get challenged, is when I fell off the wagon and went back to being, super, super aggressive. So that, and that's what we talk about. It's how do you face those emotional challenges and not become emotionally reactive? How do you actually face them and maintain your cool and follow your rules, or have the presence of mind to say, all right, that's it. I just went from up 1,600 to down 300 or whatever, down 3,000 or whatever it is. I'm done. I'm walking away. That's it. And instead, many of us in that moment can kind of fold under that pressure and we make a bad decision. So yeah, discipline is not something that you learn like riding a bike and you have it forever. It's something that you constantly have to work towards, and that you constantly will face challenges with, and it's just a kind of ever-present thing out there that you're trying to keep a good handle on. I mean, it's kind of crazy in that way, but that's part of trading. So that's where we're at. All right, so that's it for me. I'll be back tomorrow, maybe. I don't know. We'll see. And again, hopefully the market starts to pick back up, but I don't know. I mean, it's just it's a matter of time. It'll pick back up, but in the meantime, I'm doing kind of exactly what you don't want to do, which is I'm digging myself a hole that when the market does pick back up, the first few weeks of that or first few days of that is going to be digging myself, covering the losses that I incurred during choppy markets. I'm like the fisherman that's throwing back, setting back all my pots when nobody's catching any fish. And you're like, what is he doing? What is he thinking? He's just going headstrong into the wind. It's stubborn. It's stubbornness. That's all it is. And so, gotta let that go. All right. Well, that's it for me. Red Day recap, but I'll be back at it maybe tomorrow and see if things start to clear out on the other side.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.